All right. Hey, welcome back, everybody. Welcome back to the chat room. Ed Ponsi here, your FX educator here on behalf of FX Street. One more time as we go to the second session on December 7th, 2017. Remember, this is your room, so if you have any questions at all, it could be technical, fundamental, risk management, whatever you feel is appropriate, please feel free to ask. That's why I'm here, to try to help with any questions that you might have. Don't hesitate. That's why I'm here. So bring it on. Okay? All right. I'm taking a look at gold right from the start. And gold looking really weak here. Man, what happened? Right? You wonder, first of all, if that is something that is specific to gold is the first thing, or is it across the board? Well, we know that copper also got slammed, right? HG equals 103 XN from this particular vendor. So let's pull it up. And there you see copper just taking a real beating here. Looks like it's trying to form another bear flag. Although the timing is interesting, it's not exactly in sync with the moves in gold, but very bearish, and the downward move in HG does seem to correspond, and it is in tune with what's happening with gold, right? So it's not as if gold is falling on its own. Let's look at silver, right? SI equals 103 XN. Plug that in. Is silver also falling? Yeah, silver's also taking a beating. You can see we drew a descending triangle quite some time ago. And even though the price popped out of the top of that descending triangle, it still held true. And the breakdown did come. Right, it did come. That looks pretty bad. So it's not specific to gold, it's metals in general that are going down. So let's go back to gold. How far does this fall? Where is support here? We're looking at the continuous contract. And this is breaking a major support level here. 1260 was big support for gold. And it looks to me like major support is around 1200. It's not perfect, but there is some, it's above 1200. It's around 1210. And let me see if I can put a trend line in here as well. Connect the dots, as they say. Yeah, look at that. It's 12 on the trend line. Now that trend line is still rising, so I think that trend line will continue to rise. So I would have to say right now it's going to be around 1210 is the major support. That's still a long way down for gold. So, you know, gold could fall considerably farther than it has already. So it's not over by any means. Not sure why metals are taking such a beating at the moment, but you could relate that to a strong dollar. In other words, a lot of, you know, these are all traded in dollars. They're all being measured in dollars. When we say, you know, 1260, that's 1260 US dollars. So if the dollar gets stronger, then you know, you would say that gold is weaker in comparison to the dollar, just like the yen gets weaker in comparison to the dollar. If the dollar gets stronger, you could say the same thing about gold or silver or copper. So it's possible that the dollar is having some impact here, but that might not be the only impact. It's rarely just one thing that moves the market. Since we're looking at these, we might as well look at oil, and I have a request for natural gas too, so we might as well just go around the horn here. At CL equals 103 XN, we'll take a peek at oil, which had a big breakout here, and that's now under pressure as well. So it may be that strength in the dollar is putting pressure on all commodities. And what would cause strength in the dollar? Expectations of higher interest rates. And we know that the Fed is meeting next week. And we know that there's a very good chance that we will see another interest rate hike. It'll be the third one this year and the fourth in the last 12 months, because we did get a rate hike, I believe, in December of last year. So it'll be the fourth rate hike in 2 years and the third this year if the Fed raises rates next week. And I think there's a pretty good expectation that that's exactly what's going to happen. Oil should find some support at 55 because that's a pretty big breakout above 55 right here. So oil should find some support at 55. Would not surprise me. Wouldn't surprise me a bit if oil found some support at 55. Okay. Let's take a look at natural gas. I believe it's NG. Hang on one second. Yeah, natural gas custom contract. That's down pretty hard in the last few sessions, but within a range. It appears to be coming down to support around 280, right? So if I throw a line down there, you can see that it bounced out of 280 in August. It bounced out of 280 in October, and it's closing in on 280 again. So natural gas has come down sharply from 320, and right now it's about 280, 283, 284. Looks like it's coming down to the area just below 280, where it has bounced twice in the last 6 months or so. So that's what I would be aiming for. It's probably a buy right here. And that's 276, 277. So let me yeah, 2766 is what I'm showing. So just to be on the safe side, 277. Just so I don't miss this trade, 277 might be the best way to go about that. Yeah, because the low here, 2773 on 1019. Yeah, so 277, 2775 looks like an interesting place to buy natural gas. Okay. All right, so there's a little bit of a commodities roundup. And of course, we'll take a peek at the ES. A little bit of a red candle today, but it was higher. Now it's lower. And that's, I guess, just part of the volatility we've seen. But the candles are getting, looks like the candles are getting a little bit smaller, a little bit less news, right? Over the last, yesterday and today, right? So, all right. So an interesting way to kick us off. Oh, I almost forgot. Is it I guessed wrong here. Let me just go index. Can't forget this one. BRTI. $ BRTI. We know we're getting look at Bitcoin go. In the last 2 days, it's crossed Actually, in the last 3 days, it's crossed 12,000, 13,000, 14,000, and 15,000. Man, I'm really wishing I bought it now. Look at it go. Now everyone's piling in. This is where people are going to get hurt, because this is where it's going to become a mania. I mean, really, this is the scary part, where people are now fear of missing out, and they're just piling in so fast, where it becomes a mania. When people hear about how quickly it's moving up, they're going to they're starting to look like panic buying and greater fool theory, right? And you look at how much this has gone up, right? This was under 2,000 back in May, and here we are in December, and it's gone up. It was under 2,000 in May. It went up to more than 2,000 in the last 2 days. Actually went up more than 3,000 in the last 2 days. So how about that? Well, it's only a matter of time. Who knows what's going to happen? It could go to 0, or it could go to 1 million. But it's limited. So there's more and more demand, and there's very limited supply. And a lot of the other, smaller cryptocurrencies they're all taking off too. And at what point does it end? I don't know. I mean, they all probably crash eventually, but they could go much, much higher before that happens. So we really don't know. Let's take a look at dollar Canada, which was very interesting yesterday. Bank of Canada, look at the move on Canadian dollar. First of all, this is an incredible chart to me. We've got this huge, looks like a triple top here, right? And on Friday, this gigantic move downward is based on a jobs report. And the jobs report said, right, the estimate is we think Canada's going to create 10,000 jobs. They created 80,000 jobs. So the Canadian dollar gets much stronger because everybody's thinking, well, they created 80,000 jobs. They have to raise interest rates. Canada has about 10% of the population of the U.S. So think about if the U.S. non-farm payroll. Imagine if the U.S. non-farm payroll is expecting 100,000 jobs and they create 800,000 jobs. Try to imagine what the reaction would be. That's kind of what happened last Friday in Canada. So naturally, everyone is saying, well, they have to raise interest rates. Well, guess what? Yesterday, they had a chance to raise interest rates, and they did not. Not only did they not raise interest rates, but the central bank said, we're in no hurry to raise interest rates. And you can see that they have now given back almost everything. Frankly, because why? Because the central bank said. Now listen. And of course, the price of oil plays into that. The price of oil has slipped a little bit, but that's neither here nor there. This move is based on actual statistics. This move is based on talk. It amazes me to no end that people put as much emphasis on what the central bank says they're going to do in the future as they do on what actually happens in the economy. Don't you think that's weird? I mean, listen, Canada is just like any other country. They probably don't want a stronger Canadian dollar, and they got a stronger Canadian dollar right here. And if they come out and raise interest rates yesterday, or if they say we're going to raise interest rates, the Canadian dollar would probably have gotten stronger. but they did the opposite. But the truth is, that is a very, very strong number. And they created, if you go inside the number and look at the statistics, and if you look at if you read the Statistics Canada, StatsCan, if you read their press release, they're doing nothing but creating full-time jobs. These are all full-time jobs they're creating, not part-time. So the numbers are even stronger than they appear to be on the surface. So really, this move, this big red candle, that's real. That's based on something real. This move in the opposite direction, I don't know if I believe in this quite as much. You got me? I don't think I have as much faith in that move. Maybe a lot less faith in that move, right? And maybe if we do get to 129, I say we short this. You know, that's what I'm thinking. I'm already thinking, at what point am I going to short this? Because, look, I get it. Metals are falling, and that's probably hurting Canadian dollar. And oil is down the last few days, and that's probably hurting Canadian dollar too. But I really don't think that this merits a move from 126.50 to 128.50 in 2 days. And I really don't know how much I really believe what I hear from Canada's central bank. If they continue to create jobs, they're going to have to raise interest rates. So this move, I don't know if let's go to a shorter time frame. I'm not sure how much faith I have in this move to continue. Let's go to the 60-minute. $60-minute for USDCAD. I really would like to see it come higher. And there you can see there's the decision on interest rates. It just blasts through. All right, so where to short this? Is there good resistance up at 129? I think there might be, right? If you throw this on top. And maybe throw this on the bottom. Like there's this area, maybe above 128.80 up to 129.10, sort of a band of resistance. I say a band because like this is support right here. That starts at around 128.60. That's support. That should act as resistance. We're getting very close to it now, and in fact you can see how the price is slowing down as we're getting really close to what should act as resistance. I'd like to see it come a bit higher though, but I'm already thinking about shorting this because I don't have a lot of faith that this is going to continue. Dollar has moved up already, I think, based on interest rates. I think it's being priced in, and I don't think that that's just it. I think maybe it is too soon because of the U.S., let's say the U.S. raises rates. Maybe that's enough to push it up to that 129, up to this top area. So let's say we're a little bit patient. We wait for the Fed next week. Fed pushes it up to 129. Then I think we can short it, because then I think all the news is in on the U.S. side, but I don't think all the news is in on the Canada side. Frankly, I think the Canadians, Polos and the Canadians are sandbagging us a little bit. I don't think they're being 100% forthcoming when they tell us that, you know, they're not planning to raise rates anytime soon. I don't think that's 100% honest, because the U.S. economy is clearly getting stronger. It's the strongest it's been in 10 years, right? We have GDP above 3% for the first time in over 10 years. And Canada's economy is clearly creating a lot of jobs. Where do Canada's exports go? Over 75% of Canada's exports go to the U.S. So these two economies are tied together, much in the same way that Australia's economy is tied to China. Canada's economy is tied to the U.S. If the U.S. economy is getting stronger, there's really no getting around it that Canada's economy is tied to the U.S. And that if the U.S. economy is getting stronger, Canada's economy is also getting stronger. There's really no way around it. If the U.S. is getting stronger, Canada must be creating more jobs, which we saw on Friday. And they must be selling more things. They must be exporting more things. And that means they're going to create more jobs. They're going to, you know, they're going to have more income. That's going to lead to housing, auto sales, retail sales down the line. They're going to have to raise rates, right? So it's too soon. I don't want to short it ahead of the Fed. I don't want to short dollars on anything ahead of the Fed. But let's say the Fed makes their move, raises interest rates 25 basis points, and maybe that's enough to drive this up to 129 next week. Then I think it's time to make the move. So that's my idea. That's my trade idea for dollar Canada. But you got to let the Fed act first. When does the Fed take action? It's a 2-day meeting, and the meeting is going to begin on Tuesday, and it will end on Wednesday. So allow this to happen. Allow this to occur. Frankly, also, you don't want to enter any USD positions ahead of non-farm payroll, which is tomorrow. Huge event risk there. And then you have the FOMC on Wednesday. So non-farm payroll 8:30 a.m. New York time tomorrow, and the Fed 2 p.m. New York time Wednesday of next week. Tremendous amount of event risk coming your way on the U.S. dollar. So you really don't want to do any USD positions right now. Okay. As far as other events on our calendar coming up, and let's just take a look at today. Just today. When I see Aussie exports drop, I get a little bit concerned about China, Australia's most important trading partner, right? I don't want to see Australian exports drop because I get concerned about China. When I see industrial production drop in in Germany, I definitely get concerned. This is a pretty big miss for October. You're expecting a 1% increase. You get a negative 1.4%. Why is that bad? Germany is one of the biggest exporting countries in the world, and most of their exports are created in factories. Like those CAT scan machines at the hospital, or a BMW, right, car, automobile. All these are created in factories, and so therefore industrial production. Industrial production is dropping in Germany. This is bad news for Europe as a whole. Right. This is the year-over-year number. The year-over-year number drops sharply because of the month-over-month number. Okay. In Germany, of course, German exports are the engine that pulls Europe. So if I see the industrial production number dropping in Germany, that's a bad thing. Down the line, right? GDP for all of Europe was slightly better than expected for the Eurozone. That's year over year, 0.1%, better than expected, up to 2.6. Quarter over quarter, it was in line with expectations. That's not bad, though, tenth of a percent, but it's still, I mean, you look at the U.S., the U.S. is above 3% now, breaking above 3% for the first time in 10 years, while Europe remains well below 3%. But of course, if things pick up in the U.S., that's going to help Europe because the U.S. does a lot of trade with Europe, right? What do we have? We had jobless claims this morning, a little bit better than expected in the U.S. We had building permits in Canada, much better than expected. That's good news for Canada. Another reason to raise interest rates, quite frankly. Another reason not to believe what the Bank of Canada is telling us. Right. We're getting some data out of Canada, Purchasing Managers Index in 30 minutes time from now. And looking ahead, we're going to hear a speech from Draghi in 90 minutes from Mario Draghi, head of the European Central Bank. All right. Getting some information out of I don't think anyone's worried about this consumer credit change in the U.S. or manufacturing sales in New Zealand. Frankly, the only thing that comes out of New Zealand that anybody worries about is the dairy auction every 2 weeks. Nobody's really worried about any data. Look, there's not even an estimate for manufacturing sales. Why? Because they don't really manufacture very much in New Zealand, right? There's not much manufacturing being done. GDP in Japan, there's the opening bell in the New York Stock Exchange. GDP in Japan looking pretty 0.4 expectation for the third quarter. That's for tonight. Probably not a big market mover unless there's a big surprise. No, obviously, we don't expect any big surprises there. And looking forward, looking ahead to tomorrow, because tomorrow is a very big day. Tomorrow is a huge day. All right. First of all, a lot of talk about the U.S. government shutdown limit. This is always, everybody makes a big deal out of this and then nothing happens. This happens. This seems to be going on all the time. Everybody makes a big deal out of it and then nothing happens. I wouldn't worry about it. In China, we're going to get trade balance figures. These could have some impact on Australian dollar, possibly. We're going to get trade balance out of Germany, which could have some impact on the euro. We're going to get some manufacturing figures out of Great Britain. The fact that the British pound has been weaker after the Brexit vote could be very positive, or has been positive, I should say, for exports for Great Britain. But that won't last forever. But it has been a tailwind, let's put it that way. But that will not last forever. We're going to get the big number, of course, is the non-farm payrolls number tomorrow. Looking for 200,000 jobs created, but I don't know. I mean, you look at that number out of Canada and you wonder, Canada had a huge beat on their number last week. You have to wonder if that number has any relationship to what happens in the U.S. tomorrow. I guess we're going to find out. As for me, I'm going to be flat anything involving the U.S. dollar. I'm flat anything involving the U.S. dollar right now, and I'll remain that way through tomorrow. It's okay to trade crosses, but the crosses can be impacted. So when it comes to, even in other words, even pairs that do not contain the U.S. dollar can be impacted by the non-farm payroll report tomorrow. So just be aware of that. At 8, when that number hits, when that report hits less than 24 hours from now, it could move your non-USD pair. So don't be too surprised if that happens. Be aware of it. And that's pretty much going to do it. All right, that's all the important stuff. All right, and I say to you, thank you so much. It's been a wonderful time. I'm not really scheduled again for a bit. It might be a while before I speak to you again. So if I don't see you, happy holidays. I say to you, Merry Christmas, Happy Holidays, Happy New Year. I say to you, whatever, Happy Hanukkah. Whatever it is that you celebrate or whatever it is that you believe, may you have joy, may you have happiness in your life. May all good things come to you. And thank you for listening. Carlos says, Merry Christmas and go Eagles. Well, thank you so much. I appreciate that. And have a wonderful day. And I will speak to you again sometime in the future. Everyone take care. Thanks again. Bye-bye.